China's government has declared that it's stepping in to handle the debt crisis at embattled property developer Evergrande. But that does not mean that the sector is in the clear. Evergrande crash is nothing as compared to what is coming. Keep watching today's video to know what kind of threat is looming over us and why. But before that, make sure you press that red subscribe button along with that tiny bell icon to get updated every time we post new videos. Let's get started. The real estate giant, once China's second largest developer by trades, is scuffling with a $300 billion debt pile and in default, according to S&P Global and Fitch Ratings. It'll now actively engage with creditors to alleviate pitfalls and cover the party's interests, Evergrande said in an exchange form on Wednesday. Evergrande's troubles have kept investors worldwide on edge as they worry its collapse could have a knock-on impact on China's real estate sector and ultimately send the world into a fiscal crisis. China's property market accounts for a quarter of the country's $15 trillion GDP. And a number of other Chinese developers, albeit not on the scale of Evergrande, have also been agonized by problems. Shenzhen-based Kaisa, the second largest dollar bond issuer in the property sector after Evergrande, said in a stock exchange form that it's missed payments on several aged notes worth around $400 million and is in talks with bondholders for a debt restructuring. The missed payment started a cross-default provision in its $12 billion offshore bonds. Now, the cash-strapped Chinese developers are scrambling to negotiate new terms with creditors to avoid defaults, with Shimao Group and Yuzhu Group the latest seeking extensions as China Evergrande Group faces another deadline. Shanghai-based Shimao will hold online meetings with creditors in two asset-backed securities on January 17th to bounce on payment extension propositions, according to documents seen by Reuters on Thursday. The two onshore ABS products worth $183.9 million in aggregate are to mature later this month, and Shimao is seeking to extend the payment deadlines to the end of 2022 while making some payments in stages before the new deadline. Shimao last week said its missed payments on a $101 million trust loan. Ratings agency S&P, which has downgraded the establishment again to B- this week, said on Thursday it's withdrawn the rating at the establishment's call. Shimao's onshore subsidiary, Shanghai Shimao Co., verified on Thursday evening it's transferred finances to repay 4.65 yuan bond with an outstanding amount of 1.9 billion yuan maturing on Saturday. Yuzhu, established in the eastern coastal town of Xiamen, also declared an exchange offer for two of its 2022 dollar bonds due after this month, worth an aggregate of $582 million to extend the maturities by 1 year to avoid default. It expects a holdup in coupon payments totaling $110 million that are due in January and February. Yuzhu said in a form, it's also seeking permission from holders of all of its other $4.5 billion bonds to better the terms that would help it avoid cross defaults if other bondholders seek reimbursement. Chinese developers are facing an unknown liquidity squeeze due to times of regulatory limitations on borrowing, leading to a string of offshore debt defaults, credit rating downgrades, and vend-offs in developers' shares and bonds. The World Bank's Economic Prospects report said before this week, a severe and prolonged downturn in China's real estate sector would have significant economy-wide reverberations as its developers' combined onshore and offshore arrears quantum to nearly 30% of the country's GDP. If you thought Evergrande crisis was the only threat to China's economy, then think again. So that's all for today's video. Let us know your views in the comments section below. And don't forget to like this video before leaving. Thanks for watching.